presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Wow. Good afternoon, everybody. Tommy O'Brien coming to you live from TFNN. We check in on the markets, 3 p.m. Eastern time on Thursday, and we got markets green right now. S&Ps, we're challenging the highs of the session. We made those highs at about 11 a.m. Eastern time. Those highs, 6,050. We're trading right now 2 points off of there, 6,048. Relentless positive markets right now coming at you, especially following yesterday's sell-off. NASDAQ 100, we're up by 57 or 0.2%, trading at 21,941. The Dow in positive territory, as I mentioned at the top of the market, top of the hour update there, 400 points almost, the Dow. Off the lows right now, we're pushing 43,000. The Russell trading lower this morning. And yes, yields pulling back a bit. We got a little bit of dollar weakness. Gold catching a bid. Let's check out some of the movers today. How about Oracle? OCI, Oracle Cloud Infrastructure. Oracle up by 14%. 14%. And man, you talk about a bounce from the tariff lows of 120. You're at $200 above the highs of last year. And yeah, that's an all-time high. All-time high print for Oracle. And boy, quite a trajectory. It's just been nonstop, man. You know, we had the pullback in the tariffs, but you look at this equity, and yeah, there's been pullbacks. But you're talking about, no matter where you pick, $30, $40, $50, you're rising. The run really begins in Oracle in 2020 like everything else, but boy, they are on fire. And that's a monthly. Let's put it back to a weekly here. So look at this, man. You're going to blow everything apart. As in, this is going to have volume that's going to take out everything. We did 107 million shares on Oracle the week of January 20th. And think how hard it is to get above some of these volume numbers, right? And then Oracle's going to do it, man. You're at 87 million already. We got an hour left to go. We're going to have big-time volume on a day like this. Now, remember that, okay? You're coming into 107 and 96 at the end of January. 107 and 96. And we're already at 86. And on a daily basis, you're doing at least 10, and then you break in. And you can see that on the end of the days. Yeah, even yesterday. End of the day, you're doing 2 million in the final 10 minutes. So this is going to be a big number. Oracle's going to eclipse everything. We're going to do all-time highs. And on a weekly basis, man, you're going to take out the highs. And so tomorrow's going to be an important one. You want it to close above. The close was the open of that candle, like 196.30. The high is 198.31. Really, you love to see it close above that area. Keep the volume up there, and you're going to get some volume in. Look at the volume it does every time we get the earnings, man. And this is where you want an earnings equity. Look at that, right? And yeah, that's the case, but very pronounced for Oracle. But big numbers, man. You're plowing higher. You jump around to some of the other cloud providers. Amazon, we go back to a short term. Up by about 0.1% right now. Jump over to Microsoft. There you go. Microsoft up by 1.5%. Google down 0.7. Always interesting when you get the Magnificent Seven. It's a little bit of divergence. Look at that acceleration on NVIDIA, man. And yeah, that's an OCI play right there. Look at that move. 141 to 144 right now. Remarkable. All right, we jump over to Boeing on the flip side of that. Now, Boeing, clawing back some of the losses. You're still down 5%. Tragic story in India. And they're reporting, I almost didn't want to say it, that somehow there's a person that survived. There's one survivor. He's a British national. He's fully conscious. He has little abrasions and one burnt mark on his face. Now, it's so sad that everybody seems to be, dead. Okay? 242 people. I don't know. If you've watched the video of this thing, I don't know how one person even survives it. You know, it's a fireball that looks like, a nuclear fireball, man. But nonetheless, tragic story. And when you look at this is not the 737 MAX, okay? This is the 787-8 passenger jet, okay? And this passenger jet, it's been in commission since 2011, and it's never had an accident like this. Let me see as I jump around. Yeah, and here's the headline there. First full loss for the Boeing 787 Dreamliner, okay? Those Dreamliners, this one in particular was 12 years old. You got 2 GE engines on it. One of the 2 turbine options on that model. Air India had 34 of those planes in service at the time of the accident, and they introduced that in 2011. And the average age of the vehicle, I was reading, something like 7 years old. This one in particular, I think 11 or 12 years old, is out there. And yeah, they'll be digging into it, but there's currently 1,148 787 aircrafts in service, and there it was. The average age is 7.5 years, okay? The largest operator of those, ANA Holdings, with 86 of them, followed by United and American. Qatar just ordered 130 of them. So, this is a juggernaut, okay? And this is where you want to look at risk rewards here. And as somebody that owns some Boeing shares in retirement account, okay, it's been a heck of a run since I want to call it the COVID lows for a second. From the tariff lows, we'll call it, from 128 to 218. But you got real asymmetrical risk when you're dealing with this, and especially because it's Boeing right now. Okay, they got no credibility when it comes to anything that they say, right? They don't get any benefit of the doubt, as they shouldn't. And so there's a real risk here. And hopefully it's not, and hopefully, but either way, right after takeoff, and the thing just sailed. And maybe it, either way. So watch that one. And yeah, you'll get some volume, but boy, it's been a heck of a run. And the dicey part about this, right, is that you come into it when optimism is all like stratospheric, okay? All of this acceleration, right, all the Qatar orders that came in, right? I remember talking about it at the time. The backlog that Boeing has right now, Qatar's not going to get those airplanes for like 10 years, okay? So it's a theoretical order, and stuff like this, you could see a deterioration here pretty quickly. Okay, if this comes out, if there's an investigation, if it looks like Boeing at all has a problem with those airplanes that are out there, the reward is it just trades back up 4.8%. The risk out here, you got a lot of risk when you got all this acceleration out here, whether you're talking about earnings, whether you're talking about the acceleration we got from Qatar and their deal. So be careful in Boeing. Longer term, I think you'll be fine. But shorter term, folks, you just traded from 130 to 220, and now they have their first full loss of really a vehicle that's the juggernaut for that company in particular. All right, folks, we got the S&P up by 17, NASDAQ up by 49. Stay tuned. We're coming right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's making a run at it. We're up by 20 points right now. We jump to the cars. So, President Trump signing at a signing ceremony, talking about rolling back some of the gasoline regulations. Terminating California regulations that would have banned the sale of gas-powered cars in 2035. A long-sought victory for some car makers and oil companies that attack the rules as unachievable. Well, we can do anything we want in 10 years, whether it makes sense to do it, okay? But what also happened at this event was that he said that raising auto tariffs from their current 25% level could offer further protection for the domestic auto industry, citing GM's plan to invest $4 billion in U.S. plants over the next 2 years. I might go up with that tariff in the not-too-distant future. The higher you go, the more likely it is they build a plant here. Well, that might be true, but it's also more likely that you get a little uncertainty, all right? And yes, this is a negotiation, as it is always. But this is why, when you talk about U.S.-China, you talk about the 6-month deal with China, there's an ever-looming here. Are you going to jump into GM and Ford if you know that the president might get up there and then, boom, you're down by 1%, okay? There was the volatility there. You're already lower. That was the mark, okay? Jump over to Ford. There's the volatility right there, right at 12.05. Okay, we get it back. You jump over to Stellantis. They're already lower. Okay, but there was all the volume at 12.05 on those comments, and we're sitting at about 10.13. Stellantis off by 1.8% as well. And yeah, nations including Japan and Germany, right? Those are the negotiations, have sought negotiations to find a way. Trump's auto levies has sought, it's all a part of it. And so you got Japan out there, you got Germany, you got the negotiations looming. And so, everything might change overnight. And that is a constant battle. And that's going to be there. Now, Google, their cloud service down for a period of time on Thursday. Everyone's producing too many videos, folks, for VO3, for AI. No, I kid, but hey, you better believe it's possible, man. All right, there is going to be a tremendous data, energy, computing power. But yes, nonetheless, their cloud service was down for a period of time, experiencing service issues with multiple GCP products. That's Google Cloud platforms. Down detector, good old down detector, right? And so you got Google down about 0.7% with the market in positive territory. Look at Microsoft, man. Yeah, another all-time high. Microsoft's on another planet right now, man. This might be making a 1-to-1, which pushes you up to 16. $600. Excuse me. The highs from last year were $468.35. Okay. And Microsoft is just blowing through that area, man. We get above that area. All right, look at this volume, though. That's not what you want to see, man. You're doing it with price spread. But look at the drop-off in volume. Every single week we got less volume, and we're probably going to have less volume again this week. We've only done 60 million shares. You got to get to 81. And so we keep going higher. All right. Keep your spikes up on Microsoft. That's not what you want to see on that volume basis. See, we jump over to Amazon. The big dog, Apple, following their worldwide developer. Yeah, the market's a little worried about Apple right now, man. Compare this to what Microsoft is doing right now, right? Different business plans for sure. But boy, this looks like a rough chart, man. On a weekly basis, back it up to February 24th. There's no action in this chart whatsoever. You got the one reprieve of the 90-day reprieve the week of April 7th. A couple weeks after that, but no volume on that up bar. Let's back it up even further. Boy, I think Apple might be coming back to test the April lows. That's how it's looking, man. This is a weak equity right now. Apple of all equities. Yeah, Microsoft doing big things. Big things for the whole economy, man. They're going to run everything. Remarkable. 480. What are we pushing? Got to be pushing 3.6. 3.57 trillion. Yeah, we were at 3.5. Just add 70 billion in market cap from yesterday. We're going to have a $4 trillion company potentially, man. $4 trillion company. My goodness. Microsoft up by 7. All right. What else do we got going on right now? Talk a little commercial real estate. The ex-Goldman headquarters, they've been out of this building since 2011, but this is a little bit of a glimpse in certain areas of what's coming. 85 Broad Street, Goldman Sachs headquarters in downtown Manhattan is in default on the tower's mortgage. $359 million loan was transferred to a special servicer this week to determine a workout plan as they missed a payment. Now, this has been on the radar since February, whatever that means. They talk about it. The building was constructed in 1983. The headquarters of Goldman Sachs, they left in 2011. Okay, they've been gone for 14 years. No longer has ties to it at all, Goldman this is. Now who do they have in there? WeWork and Oppenheimer. Well, Oppenheimer, all right. WeWork, not exactly Goldman Sachs. WeWork and Oppenheimer, which has its headquarters in the property, roughly a quarter of the tower's 1.1 million square feet. How's that for a square feet? Okay. Is due for lease renewal within the next 36 months. Okay. That's a problem, man. And you can see that, and this is what they talk about in here, okay? The landlord, over they're in discussions with Oppenheimer at the same time, okay, over the lease terms. They're exploring options for the tower, including conversion into housing. Imagine that, right? You got a building like that, but that's the debt for this building. Here's the best part. Of course it is. Where's the debt? It's in a mortgage-backed security. It's in an MBS. Now, this is not like, the housing bubble, but you better believe it's packaged into a security, folks, okay? It's been on a watch list since February. Well, yeah, there's going to be some red marks, red flags, and a building like this isn't going to go unnoticed when you have availability, you have people coming up, okay? But yeah, that's, you got a mortgage-backed security, the debt's packaged into it, they're missing some of the payments. This is a marquee building that was constructed in 83. Now, you're talking about a building that's what, 17? Yeah, 42 years old, okay? And Goldman's been out of it for almost 15 years. And you got a quarter of the space coming due in the next 3 years, and what do you think those tenants are going to do? Okay? But here's the kicker. It's not just the tenants. The stuff we've been talking about with how difficult it is to cash flow residential property right now, it's tenfold for a commercial property when you're dealing with 1.1 million square feet. Okay? Older buildings, large vacancies, and what else do they have? the costs are increasing and the rents are declining. Now, rents aren't declining on a residential basis, but costs are sure increasing, folks. Okay? The cost to debt service is increasing, and the cost for everything else, period. That's it. All right, S&P's up by 16 right now. NASDAQ 100 up by 45. We get the Dow up by 48. We jump over to that gold contract, catching a bit on some dollar weakness today. Gold up by $64. We jump back to that dollar under 98. All right, folks, stay tuned. We're coming back. We're going to talk with our man Tim Ord. We'll talk some ratios. We'll talk some indices. We'll talk some gold as well. Always a good segment. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps just chopping around. Look at this. Right since 11 a.m. just chopping around at 6,045 right now, up by 16 points. And right now, folks, we're going to talk to our man Tim Ward. You can reach Tim. We talk to him every Tuesday and Thursday at the bottom of the hour, 3:30. You can reach Tim at his website, ord-oracle.com. And let's jump right into it. Tim Ward, good afternoon.
Yeah, good afternoon. How you doing, Tom?
Doing well, man. We got quite a relentless market, Tim. What are you making of it, man?
Well, we got a little divergence. Nothing real serious. I'm kind of just looking. This is chart 1 here, and this second window, or actually window down below the SPY. This window here is the SPY. But anyhow, I do the SPY VIX ratio. And the only reason why I do that ratio is because when the SPs go up, this ratio should go up, because the VIX actually trades the opposite of the SPY. So if you do the SPY VIX ratio, it goes with the trend. It's a little bit easier to follow. But in a nutshell, when the SPY is hitting a high, you should see the VIX, or the SPY VIX, hit a high. And the last time that did not happen was back at the mid-May high. We had a minor high back in mid-May. You can see right here where the SPX VIX ratio made a lower high and the SPY made a higher high. We got something similar going on right now over the last 4 or 5 days. You've been making higher highs, and this ratio is making lower highs. Nothing real, terrible. I think at some point we're going to pull back, but it's not a major sell signal. It's just we're probably going to pause the uptrend. But I do think we're going to get back to the 570. We'll go to chart 2. The reason why I may get back to this is a weekly chart of the SPY, and last week we broke above the previous highs of the last 3 weeks. And when you break above a previous high, you should have this is a weekly chart, so it's a weekly volume. You should have at least the highest of the previous highs. You should break those highs on at least equal volume, if not higher. And we broke above the previous highs on 340 million shares. The previous highest high of those, that little trading range of the previous 3 weeks, right here, was 370 million. So you broke above on 340 million. That works out to about 8% lighter volume on a break above the previous highs. And normally when you break above the previous highs around 8% or lighter volume, it's usually a false breakout. But it's just a minor, this is nothing like major, but again, if you break above a previous high in a lighter volume, it implies a false breakout. So if you close above that previous high, which is around, 595, if you close below 595, then that would be a false breakout to the upside. So if you can't hold the highs, the previous highs, it'll attempt to take out the previous lows. Well, the previous lows is 570. So it's not a big decline, but you may go back down to the bottom of the trading range. And that's probably what should happen. If you look from here to here, I'm calling this a left shoulder of a head and shoulders bottom. And so if you do symmetry, a lot of times the left shoulder will equal to the right shoulder. Matter of fact, actually I got another chart to show that. But I think what's going to happen over the next, several days, maybe a couple of weeks, we're building a right shoulder that's probably going to look similar to this pattern that was created going into was the left shoulder, which basically started in November and lasted until it looks like about February back here. So head and shoulders patterns have a lot of symmetry. So if the left shoulder is 3-4 months, the right shoulder should be 3-4 months, and that's the reason why you got a doldrum market going on, because you're probably going to build just a trading range, and this trading range is going to turn out to be a right shoulder of a head and shoulders bottom. But so I got my projections that you may go down and try to rally again, go back down, and maybe we break out in sometime in August, and I'll show you the reason why that August may be a good time frame. But there's not a lot of money to be made other than trading against the previous highs and previous lows, because I don't think the breakout's going to come maybe in September. The reason why I say September is this reason. Here's the head and shoulders. This is the monthly pattern, and I did a cycle line here, this red cycle thing going on. Well, the right shoulder, in my opinion, started around December, and the head started in April, so I measured the left shoulder to the head and took the head and measured it out. It comes in around August. So I think you could screw around in this time frame until August. So that's another month, maybe 2 months. I don't know when in August, but then from there we start breaking out to the upside. But the bigger pattern forming is probably is a head and shoulders bottom, and the right shoulder is forming right now. The head is the April low. As I said last Tuesday, this is a railroad pattern right there. The reason why I call it a railroad pattern, the market goes down on high volume, and it has to reverse back up on about equal high volume, and the two candles should be about the same. So it kind of looks like a railroad track. So you go down on high volume and you come right back up on high volume, and both the left and right price patterns or candles should be about the same. And that's exactly what happened. And those come at major reversals. You can do it on a daily, you can do it on a weekly, you can do it on a monthly or whatever. It works on all time frames. Nice. But anyhow, they predict a major low. So I think the April low is not going to be tested. The worst scenario you're going to get is around that 570 area. And I think that 570 is going to come up, I don't know, soon. Am I going to short the market? It depends how clear the signal is. But a lot of times during the summer, you get these dull markets, and they're a little bit hard to trade. I trade off of fear. Fear are the easier trades. They're the harder ones to put on. But they're a lot easier to make money, because when you get fear, you get a really good trade set up. And I think that fear may come in probably August, maybe September at latest. And that's the trade I'm kind of keying on. But between now and then, if we get down to 570, we get a little bit of fear in the ticks and trend, I may consider a long position. But right now I'm neutral. So.
And I love the analysis, Tim, as always. And it in my own head here, it kind of makes sense. You get the market goes down 20% into those April lows. We're up 25% from those lows. Maybe you digest that a little bit. Quite a move.
Yeah. Yeah.
Stay with us, Tim. All right, we'll come back, folks. We're coming back with Tim. We're going to talk a little gold as well. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's up by about 14 right now. NASDAQ 100 in the green, and we're talking to our man Tim Ward. And folks, you're hearing Tim talk about the ratios right under the services tab. 6 secret ratios every trader should know about with Tim Ward at TFNN. One of those, the SPY VIX. I love that webinar you did, Tim, and that's available, folks. You sign up for it, you'll gain access to it instantly. Watch it as many times as you like, and it's pretty cool how you take a look at these ratios, Tim. You're comparing it to the VIX, and it makes sense. And I'm talking fundamentals. I like bringing the technicals back sometimes. There, you're looking at market prices, and then you're looking at fear, right? Like you talk about with the VIX, which is is that why? And maybe we could jump around. I know you got your chart ready, but some of those ratios, it's pretty cool how the VIX. I follow where you're talking to my dad, how that stuff relates when you tie in that fear gauge with some of the indices and some of the other aspects that you look out on charts, right? Is that how that works?
Yeah, you can tell. Right here's a weekly chart, and if you notice the VIX is up. And you can actually see it a little bit better here. My chart's getting kind of messy. But anyhow, obviously the SPYs are, compared to last week, we're a little bit above last week's high. And if you notice, the weekly charts, VIX has even turned up here a little bit. So that's a warning sign. The smart money is, kind of watch what's going on. And if you notice, where the high of this week, it's pretty close to that resistance level up here around that 610 area. Does it have to get exactly 610? No, but we're in that vicinity. So
it's pretty close.
We're starting to see,
right? Totally.
Yeah, pretty close. And the VIX is up. I don't know what tomorrow's going to bring, but it's a weekly chart. But chances are, if you look at this week's volume, we got 1 day to go. I don't know if this week will be reaching last week's volume or not. Probably not. So that'd be kind of another sign. So you're kind of like hitting higher highs and lighter volume. At some point, the market's going to reverse. So, but it's going to find big support. I won't get into it, but there's big support around 570. I don't think, other than test it maybe a couple of times, that's going to be solid support, and that's what I'm really looking that vicinity to get the next buy signal. So we'll see how that works out. But I'm kind of being patient here. Everybody's kind of bored with me because there's not a lot of action here. But the market's creeped up. I got some bearish signs, but nothing really huge. So let's flip to the gold market. What do you say?
I like it. Let's do it.
All right. This is the top window is the bullish percent index for the gold miners index. And what that measures is the bullish percent index measures the percent of stocks that are on point and figure buy signals. So the gold miners index of the stocks in the gold miners index, I think there's like 30 some in there. 96.43 of them are on buy signals according to the point and figure buy signal method. So in other words, almost 100% of the stocks in the gold miners index are on buy signal. Well, you think that would be bullish. This is, I think, a monthly chart. No, it's a daily. Okay, it's a daily chart. Chart goes way back, though, to 2006. Bullish percent index started, it looks like, about 2008. But you get up around 95%, and we're 96.43, but you get up around 95%. I marked all the previous times you did that going back that many years. It's pretty rare when that happens, but every time it happened, the last 3 times it happened, you got a high. Here's it back in this. You went through a sideways pattern before it declined. Here was a top. Here was another decent top, and here's a decent top here. I don't think we're going to have a decent top, but I do think the upside's minimal here. And I'll go through that, the reason why. So that's a bigger view where we are. So it's kind of late in the game. You get that much bullishness. You get 95% or more of stocks on buy signals. The market's getting too frothy. Here's a shorter term view. The bottom window is the GDX to GLD ratio. Next window up is the GDX advanced decline cumulative with the Bollinger Band on it. Next window up is the GDX up-down volume with the Bollinger Band on it, and that's also cumulative. And the top window is the GDX. So this is the GDX up here. And you put Bollinger Bands on it when you get 3 of the 4 indices getting above the upper Bollinger Band, which actually all 4 did on this last rally up. Normally the market's due for a rest. How big a rest, you don't know, but at least previous ones look like at least a month. Some went longer. This one, went down for October to January before it reversed back up. So we're short term. We just got too exuberant to the upside, and I actually got a lot of emails over the last several weeks, or last 3 weeks probably. Ask me what stocks to get into, and I'm thinking, well, there's a lot of them, but I don't think it's quite right now. I do think there's rotation going on, but the big stocks right now, like AEM, Newmont Mining, and actually GDX itself, is probably not the great buy right here. I think you're going to get a pullback. And here's another reason why. It's another way of looking at it. So I always like to have at least 2 different, if not 3 different indicators saying the same thing. And this is another one. This is the monthly GDX. And I put a Bollinger Band on it. And if you get 80% above the upper Bollinger Band, which, back here you did, back here it's kind of hard to see, back here you did. And we actually did, I got out in April. I had an upside target around 50. Maybe I thought I'd get to 52. It actually went to 53. And because it's just 80% above the upper Bollinger Band, and it did back off before the month was out, and I got out. And now we're going up for a retest of the April high. We're testing it right now. And so I'm thinking we're not going to keep going here, because I don't think we'll have the volume this month to push above the April month volume, which is what you need to have the trend continue. But also you got RSI. You get up around 70 on the. This is a monthly time frame, not a daily or weekly, but a monthly. So you got the upper Bollinger Band, you're 80% above the upper Bollinger Band. You got the RSI hitting over 70. Right now we're at almost 74. You're due for a rest. So how big a rest? I think we could get back to 40. So just a consolidation or an uptrend. Consolidations are good. So it's nothing to fear, but it's kind of being patient here. Everybody wants to buy at the top, and everybody wants to sell at the bottom, and that turns out to be true this time around. We got one more chart here I wanted to cover. This is a big trend on the GDX. What I did, I compared the monthly HUI to NDX, or a QQQ. This is a NASDAQ. And I think there's a big change going on in the market. It's pretty hard. So what I did, I put an RSI on this thing. So on the monthly HUI NDX, when this RSI is above 50, the market's in an uptrend, and they stay in an uptrend for a long time. So this period here, from 2000 to 2012, gold stocks outperformed the NASDAQ. From 2012 to 2024, NASDAQ outperformed the gold stocks. The other way around. Yeah, so now I'm thinking the gold stocks are going to start outperforming the NASDAQ, because this is the first time since 2012 that the RSI got above 50. We're at 56
you look at some,
area right now.
Some of those tech companies, Apple pulling back a little bit. They got quite a pricing for those tech stocks right now, for sure.
You and your dad made a or actually me and your dad made a lot of money in that gold run up from 2000. So, I think
I remember that myself. I was barely 20 years old. Tim, thanks so much, man. Have a great week. We'll talk to you on Tuesday. Folks, we'll be right back.
To focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. As I was mentioning, talking about those ratios, great ratios, and Tim has more than these 6, but start with these 6 or start somewhere, folks. You can always check out Tim at ord-oracle.com, but right at TFNN as well under the Services tab, okay? He was talking about the SPY VIX, the SPX VIX is in there, the TLT, right? Talking about bonds right now, and then you get the VVIX VIX, as well as a couple others, trend panic levels in there as well. It's a 90-minute webinar, folks, right at TFNN. Okay, check that out, and you gain access to it. You keep it as long as you want. You watch it as many times as you want right at your members page at TFNN. And yeah, checking out some of these gold stocks, okay? You got to be careful. This is me adding my analysis, just agreeing. I think, and that's what Tim is seeing in his numbers. Well, folks, some of these gold companies, okay? You look at the technical areas. I mean, how about it? Harmony? Talk about a technical area. You're bumping up against highs from 2002, 2004, 2005, 2006, 2011. And look at the pullbacks that are possible. My dad used to say it all the time. You don't own the miners. You trade them. Maybe you swing trade them, okay? The metal you can own. You look at Harmony, right? And then you look at the chart of golds. Okay, you look at any equity out there, they're like that, man. You look at Newmont. Look at the pullbacks that Newmont has. We're on an epic run right now. Okay, I am gold, a little bit of a different story. But look at that run. Okay? They all have these pullbacks. Talk about new gold. All right? Yeah, I have to wait for these charts to snap back to the realities of the past. We've had a heck of a run, but there are very few gold equities, folks, okay, that don't have a real pullback when gold has a marginal pullback, and that's what you could be running into. There's a strong equities, man, okay, but be careful getting into an equity at $5 like New Gold that might be the strongest gold stock in the newsletter right now, folks, okay? There's a few good ones. New Gold is definitely one of them. You just traded from 1 to 5 in like a year, right? Keep those spikes up on a risk-reward perspective. Markets in the positive, folks. All right, we're finishing. S&P's up by 13, NASDAQ 100 up by 23. Folks, thanks so much for tuning in. Have a great day. Have a safe day, folks. And we got Basil Chapman doing 9 till 11 in the morning tomorrow because I'm doing Larry Live Trading. Go sign up for Larry Live Trading.